We continue to watch the movers. Joining me right now is Schwab Network's Stan Vadas, taking a look at a few names here, and we're seeing Whirlpool down about 10.5%.
Yes.
Good morning, Sam.
Good morning. A disappointing earnings picture from Whirlpool, and I think the key word now for Whirlpool is front-loading, not just because of the washing machines and dryers that it offers, but it's contending with international competitors who seem to be trying to get ahead of those tariffs as far as the imports are concerned. So this was certainly part of the story for Whirlpool as to why we certainly saw a disappointing earnings report card. Let me run you through the numbers for the quarter that was. It was a miss on the EPS of $1.34 versus $1.54, which was estimated. Revenues came pretty much in line at $3.77 billion. It did cut its full-year profit guidance, so no doubt some concerns on the horizon still, and lowering its quarterly dividend too. So the challenge, as I mentioned, seemed to be from these foreign competitors stockpiling in the US market to get ahead of some of those duties. However, the good part is that the company does foresee longer-term positivity and optimism here as far as once those tariff rates are set in stone, then it could have a competitive edge against some of those foreign competitors. Then also, when it comes to the domestic situation as well with the macroeconomics, it is also banking on the hopes that it expects to see some improving sentiment in the housing market as well. These are all sort of not now stories, but in the future, and they hope that that would then translate into more discretionary spending on the white goods and obviously the products that it offers. But yes, it is taking a ding to the stock to the tune of almost 11% in trade this morning. I mean, this stock is down year to date 24%. So no doubt this is a tariff exposed story, and we are feeling the effects of that today.
Yeah, I mean, worse than expected quarter, worse cutting the guidance, cutting the dividend, and the tariff story still just being so relevant for this kind of business. So let's leave that where it is at this moment, down 10.5%. Then you have UnitedHealth, which has been a terrible stock for folks. What's the latest?
It has. So a little bit mixed in the fact that a lot of the analysts and the investor focus was on whether they would reinstate that guidance. That is what we got. So that was the good news. The bad news, perhaps, is the fact that it came in lower than expected and it failed to impress. So analysts had been absolutely focused on reinstating that guidance after they had cut the forecast previously. Now what I'm seeing from a lot of the analysts' notes is that they're focused on what they have to say about growth moving into 2026. Now, the closely watched metric here for a lot of the healthcare providers, the insurers, obviously has been that medical care ratio. I was talking to you, Nicole, about this last week with Centene, where that had actually gone up. Now, going up means that it's the premiums that it collects versus the amount that it pays out in those medical benefits, and that is what has picked up as well over at UnitedHealth. So this is really a story, as we're feeling across the board from a lot of these companies, of higher medical costs. And so they do say that this is very much a story of those rising costs, and that very much is weighing on the minds of investors as well, when they might actually be sort of clear of some of the impact that is having on these companies. But it's been a big few months, no doubt, for a company like UnitedHealth, obviously having to come out and confirm that it was complying with that DOJ investigation, the federal scrutiny here. But yes, it is taking a hit to the shares this morning as well. We are seeing that down almost 5% in trade today.
Yeah, and I mean, overall, all of these things that have to do with medical and pharma, and the group has not done particularly well at all. We were talking about Novo Nordisk today, not the same, but this whole group, if anybody was thought this was going to be the bright spot, it has not been. It has been utilities, it has been technology. Next up, we have Spotify here.
Yes.
What's going on? It's down 9%.
Yeah, so it was a surprise quarterly loss. So it was a bit of a lackluster quarter for Spotify. I remember you talking to Michelle Gibley just in the last segment about some of the FX challenges as well. No doubt the fluctuations we've seen as far as currency markets has been a factor here. Spotify did certainly suggest that some of the currency swings had resulted in what was a 104 million euro drag during the quarter. So the company was hit by 116 million euros in what they call social charges, and what that refers to is the payroll taxes that go up with the firm's stock stock price. However, it wasn't all that bad. There was some good news, and that was certainly on subs. So if you take a look at the subscribers, 8 million premium subscribers in the June quarter. That was more than expected at 5 million. And it ended the period with 276 million subscribers across the globe. So it does look like consumers are continuing to stick with this music streaming platform. It does remain sort of dominant in this space. We know, obviously, it has been shifting a lot of its focus, obviously, to advertising where it's pulling in that revenue, but also to videos to compete with the likes of YouTube, for instance. However, I did see some of the C-suite commentary off the back of this saying that the one area that hasn't met their expectations is the ads business. They say that they've been moving too slowly. It's taking longer than expected. They want to see more improvements there. But, you know, in terms of keeping customers on the platform as far as initiatives are concerned, also to attract some of that advertising, I mean, on AI, you have to talk about AI if you're in the business of technology. It's rolling out this feature of the AI DJ. The company does say that that is gaining some traction. It's actually doubled as far as the offering over the past year, and audiobooks feature has expanded across other international markets as well. So it is off that $785 high that we've seen previously. It did come off certainly ahead of this earnings, but, you know, obviously this is one to watch where, you know, it does stand in a good position when it comes to the sort of music streaming. It just depends on whether it can sort of take on the others when it comes to the video offering, Nicole.
It really is a big gap down today. Yes. You know, when you're down nearly 10%, the high was 785. Now it's at 638. The high wasn't that long ago. No. I mean, here it looks like it was late June or early July, that level. So, but the big picture here is that it is a behemoth. And when I was having a great conversation yesterday with David Schulhoff, who's the head of the music ETF, MUSQ, he said this name is something special in that it's the leader. And granted, there's competition from YouTube and Apple Music and all that, but Spotify is in a league of its own.
Absolutely. And to your guest's point, I mean, it speaks to some of the analyst calls on this one ahead of this earnings picture. I mean, you've got the folks over at Evercore ISI, for instance, who are maintaining outperform and a $750 stock price target on Spotify. So they do believe that, you know, there is some more upside here, even though it's taken a bit of a leg lower off the back of what has been a bit of a surprise quarterly loss here, Nicole.
And look, they have a range of offerings, music, podcasts, audiobooks, and they said it's just taking longer to see some of their improvements take hold.
Yes.
But it's an execution challenge, not a strategy problem.
That's right.
So that's good news, it seems. I mean, you know, I don't know. So that's that. Last but not least, we take a look at another name, and we're looking at UPS with its quarterly numbers.
Yes, and another tariff exposed story. Obviously, when you have the word postal service in your title, of course, it's going to be tariff exposed. So we've seen that the company did not update its full year outlook for the second straight quarter now. So that seems to be no doubt what has failed to impress investors here, given the lack of visibility that this company clearly has as far as the tariffs are concerned. They've also cited the macroeconomic uncertainties too, what it's going to mean for some of those small to medium-sized business who very much rely very much on the China market, particularly when you look at the de minimis exemption, which has now been scrapped. That has been really key for a lot of these companies in this business because of the fact that that was basically the rule which allowed packages under $800 to come into the US duty-free. Now, that was obviously something that a lot of the smaller firms relied on, and particularly when you look at where they were coming from, you know, your orders from the likes of Temu and also Shein. So that has no doubt had a bit of an impact on a company like UPS, particularly when it comes to those smaller packages. And we've also heard the company in recent months highlighting some of the risks and the challenges and the worries for particularly some of the smaller companies which really don't have the financial power and might to be able to diversify their supply chains and their markets, you know, moving manufacturing or perhaps where they get some of their sourcing from to places like Southeast Asia, away from China, which has been targeted under these tariffs. Perhaps though, Nicole, you know, when it comes to some of the deals that we've seen getting across the line, and as you were talking to Michelle about as well, we have seen China in talks with the US now. It seems to be making progress on that front that, maybe things might look up for this company, but not to mention at home, they've had to cut jobs, shut facility to save money. I think they're aiming to save some like $3.5 billion. So, UPS is a really good indicator as far as a bellwether for a lot of areas of the economy. I mean, not just what we're seeing as far as global shipping, but, what it tells us about the state of, companies here doing business who are largely exposed to overseas markets.
And look, with all the uncertainty, they said how much is unsettled in the sector, as you noted. And while we still have some fluid trade policies underway, they just don't have the clarity and visibility to give us the outlook. And the holiday season is approaching, and they want to put out these peak plans so their customers know what's what. But they can't set up for the holidays, and so that gives them difficulty with the forecasting.
It does, and Diane and I have been talking about this sort of ad nauseum each morning when we've been sort of I suppose, combing over the trade deals and certainly the talks happening between the US and China right now. I mean, when you're talking about a potential for another 90-day trade truce between the US and China, I mean, that is kicking the can down the road. And while no doubt that is good in terms of managing to try to avoid any further escalation in this very fraught relationship, then you're talking about, the potential for tariff rates being settled at the end of the year when you do start to see some of that holiday spending. So it's anyone's guess, and perhaps it's no surprise that they have a lack of visibility when you're dealing with such a fluid situation, to your point.
All right, great coverage. We have all those names: Whirlpool, UnitedHealth, Spotify, and UPS. Sam Bottas,
Thank you.
Thank you so much.